Morning and welcome to today's Arch Update. Now today I'm really privileged to be standing next to Dr Steve Garth. And Steve has joined our investment committee as an independent member of our investment committee. So welcome, Steve.
Yeah, thank you, Nigel. It's great to be here.
Yeah, it's great to have you here in live and real person as well. So Steve, a lot going on in the world and particularly the Ukraine-Russia conflict, which is very sad to see. So today we just want to talk about from an investor perspective. So why is the Ukraine important? Why are we worried about this?
Yeah, absolutely. Look, Ukraine is important. Number one, it is the second largest country in Europe by size. It's got a population of about 44 million people.
Yeah.
But more importantly than that, strategically, it is the largest country with arable land for growing agriculture. Wow. And secondly, it's one of the largest places with natural resources in the world. So you think about that, it's food and energy.
Sounds like a little Australia in Europe, doesn't it?
It's not dissimilar to Australia in terms of natural resources and agricultural land.
Yeah. Well, obviously we feel for anyone who's under conflict at the moment, it's a terrible way to wake up in the morning being shelled in any part of the world. But and unfortunately it takes a conflict sometimes for us to understand what's going on in some of these countries. And from an economic point of view, how important they are. So from an economic perspective, how will this impact markets, or how is it impacting markets?
Yeah, well, it's directly related to the two things I said, Nigel, food and energy. And so we expect food prices to rise. I mean, any conflict that's going to stop the exporting of grain and wheat out of the Black Sea is going to lead to an increase in prices. And any disruption to oil and gas is also going to lead to an increase in energy prices. Yeah. Now, all this is happening at a time when those prices have been going up anyway, and I'm sure that everyone watching will realise that the price of petrol here in Australia and the price of food has actually been going up over the last couple of months. So this conflict is likely to push those prices up even higher. The other thing that it may do is actually put the world into a global slowdown, a GDP slowdown. So there's two conflicting things going on here. One is an increased inflation and the other is a global slowdown. Now, we don't know whether either of those things will happen. It seems more likely that inflation will happen than the economic slowdown.
Yeah, really interesting. I mean, look, our GDP figures here in Australia, I think we're the best in something like 36 years, but obviously coming out of COVID and coming into this calendar year, Omicron, people were worried about, and suddenly, there's a real conflict going on in the world. So, what's going on in the markets and what do you think is going to happen? I know we can't forecast, but what do you think is going to happen in the next few months or so?
Yeah, well, look, let's have a look at what has happened in markets. First of all, we should get some sort of context around this, Nigel. And I'm sure everyone is aware that last year was an exceptionally good year in financial markets. If you're in a developed market, it returned about 25% to an Australian investor. The ASX 200 returned about 17%. Yeah. So that's fantastic, returns for 2021. Right from the start of 2022, though, the markets have come off. This is before the conflict really hit the headlines, and that has been due to rising inflation and the thought of interest rates going up, that every central bank around the world has said, interest rates will be going up. So what we've got then is the market was already sort of in a correction territory, and of course this conflict has just pushed that down even further. And when you look at the chart here, you can see that the market is down.
I'm an investor watching this, and I think that all sounds good, but hey, I've just retired, or I'm just about to invest some money. That's where it gets a bit nerve-wracking. They can understand the theory, but look, this is the point in time when now they have to live off their money. So what should those investors do? Yeah,
so first of all, for existing investors, do nothing. If you were in the right portfolio before the conflict started, then you're still in the right portfolio. And for new investors and existing investors, markets get rattled by geopolitical conflicts, from time to time. They tend to be quite short-lived in the market, anywhere from, a couple of weeks to a couple of months of that sort of uncertainty. Markets are always uncertain. My view, if you've just retired and you're looking at what's going on at the moment, here's the thing. When you go back and you look at investing for the long term, you look over a 30-year investment in just a balanced portfolio of equities and bonds, it's gone through many periods of conflict and geopolitical turmoil, and yet it's given outstanding results to investors, just being disciplined and diversified. And they're the key things. So even if you've just retired and you look at the market going, this is a bad time to be in. Unfortunately, nearly every time's a bad time to be in, but every time's a good time to start getting in. Markets do go up over the long term, and you know that chart we've got there just shows the power of being disciplined and diversified.
Yeah, no, thank you. So it's obviously brilliant to have you on our investment committee as an independent person on that committee. It gives us a great knowledge and breadth of experience. And one of the things we've looked at, which you've been able to help with, is when this comes up, and situations like this will come up again, going a bit deeper. So can you just explain a bit of the exposure that a client might have to Russia anyway, even though this is a bit worrying and it does affect global markets? But yeah, just a little bit of insight into, well, if you're an investor, really how much exposure do you have to Russia?
Yeah, okay, Nigel. So normally in a diversified portfolio, out of your global shares, normally a small part of that will also be into what's called the emerging markets. Now, the emerging markets are only about 12% of the global shares. And within the emerging markets, Russia is a part of that. It's about 3% of the emerging markets. So even when you are in a diversified portfolio of shares, your actual exposure to Russia is actually minuscule. It's tiny.
Yeah, I think that's really interesting and really important for people to be aware of that as well. So at the end of the day, these things are a bit nerve-wracking. The media obviously gets excited, and it's all over the front pages. And we do get a tendency to go home and watch the news at night, which we normally wouldn't do because we're worried about what's going on. So for all investors out there, I think the key messages are that if you're already an investor, your portfolio is structured to go through these ups and downs. And we know that if you're a relatively new client or we're starting to implement new money, then obviously we're going to be a bit cautious at times like this. We're not trying to time it, but we'll be a little bit cautious. We'll take our time, and things will unravel. The markets go through these episodes all the time, and they come out of it. Any last comments for anyone watching today?
Yeah, I know you've summarised it perfectly,
Great.
Nigel.
Yeah.
If you're an existing client, do nothing. There are two things you can do with the portfolio, which is do something or do nothing. Yeah. Now, in life, normally doing something, exercising more, eating less, that's a good thing. Yeah. It doesn't work that way in investments. In investments, most times, doing nothing is the best course of action you can take.
Yeah. Well, Dr. Steve Garth, great to have you on board. We're really excited about having you here today and for future episodes as well. Thanks so much.
Terrific. Thank you, Nigel.